This thing is, you can't kill it. If we die, we die!
Right, hello and welcome to Camel Finance. I'm your boy Camel, and I was looking at my analytics on my YouTube channel, right? And I noticed a massive, major, significant trend and pattern. Every time I bring up inflation or the inflation to deflation pendulum or the cycles pertaining to Fed rates, the trend is clear and people click off of the video. Now, I don't know if it's because that is quite a complicated topic. I don't know if it's because people are just assuming that I'm flat out wrong about inflation moving into deflation, and maybe they just don't want to hear that. What they want to hear is printer is coming, right? But if you only know one thing at the moment, if you only knew one thing as of last year, this was all you needed to know. You only needed to know the stuff that I've been preaching about the inflation to deflation pendulum, and you would have been able to stay on the right side of the trend the entire year. So it's pretty interesting that the single biggest piece of alpha on this channel is the thing that people stray away from the fastest. So I'm just going to leave this here, okay? 2.09. If you know, you know. One of my friends sent me this morning, and it was a clip of Pomp, and he said a bunch of things. This is an 8-minute clip. I'm not going to play the whole 8 minutes, obviously, but I will say this. Inside of here, I saw a Pomp make a couple of points, and I'm not picking on Pomp. I'm just simply saying that when I see people parroting the same ideas, when I see some idea that is circulating and becoming commonplace, that is typically where you find vulnerability in your investing plan. So what exactly do I mean by this? Well, he said, and it's not just Pomp, okay? I've been hearing this over and over again. Rate cuts are coming, and that is ultimately bullish. And he also said that QE debasement, or the printer, is coming, and that's mathematically guaranteed because fiat has to be debased, and thus that's really bullish for Bitcoin and the stock market. And the reason I bring this up is because they are falsely coming to the conclusion that stimulus is coming, right? Easing is coming, and that is bullish. But whilst that's kind of true in theory, okay, in reality, in the real world, it doesn't really work like this. So I just wanted to point this out and say, just be careful, okay? Just be careful because yes, in theory, when they debase currency, stuff goes up, okay? Yes, in theory, when you weaken fiat, it's good for the price of Bitcoin. But in the real world, it doesn't quite operate as black and white as that. So let me start with this rate cuts are coming thing, okay? If I hop into this chart, the green is the 2-year bond yield and the orange is the Fed funds rate. Now, the blue vertical lines denote each time in which the Fed funds rate crossed above the 2-year yield. What then happens afterwards is the Fed pauses interest rates, denoted by the horizontal in orange, right, every single time. And shortly thereafter, the Fed moves into cutting rates. And of course, the 2-year bond nosedives, or the 2-year bond yield, I should say, nosedives. And this is how the hiking cycle plays out pertaining to the 2-year yield. Now, why is this so significant? Because if I overlay the S&P 500, which is in blue here, right? I'm using the SPX as my proxy. What you will notice every single time is, remember, these blue vertical lines denote the point at which we move to a pause in the Fed funds rate, okay? And what happens every single time as they start to cut rates, the stock market enters a declining period, right? Here is the flat part of the pause, so the Fed funds rate. Once they start to cut rates, the stock market falls off a cliff, okay? It's the same every single time. Why would this time be different? So in theory, rate cuts are stimulative. Rate cuts make money cheaper to borrow. When money's cheaper to borrow, it finds its way into the stock market. But in reality, once they start to cut rates, why would you just rush out to borrow money at 0.5% or even 1% below the current rate when you know if you just sit on your hands and do nothing for a few months, rates are going to continue to come down and you'll be able to get that money at an even cheaper rate and then put it in. So in reality, okay, rate cuts are actually bearish. Rate cuts are actually bearish, even though they are supposed to be stimulative. They just simply aren't in the real world. And the second thing to point out is QE debasement printer is coming, that's bullish. Well, yeah, when you say it like that, of course it is. But again, in reality, when this is the look of the stock market in blue, okay, when the stock market is at all-time highs, does the Fed have a history of launching a QE bomb? No. That's just not how it works, okay? Normally what happens is we have a massive sell-off, a big blow-up, something breaks, we enter a big bear market or a recession, a long and drawn-out portion of a decline for the stock market, and then it's at the bottom here. It's at the bottom here that they launch the QE bomb to restart the system and to stimulate. Okay, so the idea that fiat debasement is mathematically guaranteed, I agree with. It is. There's no other way to service the debt. The idea that debasing the currency means number go up for Bitcoin in the stock market, I agree with. But mechanistically, okay, as a mechanism, how it typically works is as we move into this portion of the cutting cycle, that usually marks the top for the stock market, there or thereabouts. The stock market can continue to trend up for one, maybe two cuts, but typically speaking, the end is nigh once they start cutting rates. And remember, at the moment, the CME is pricing in cuts for March, okay? So number one, cuts are probably coming in March, according to the CME at least, and that means the top is probably coming somewhere between March and May for the stock market, based on historical data. Number two, once the stock market enters a declining phase, that typically means they continue to cut rates as things break and they continue to try to ease, and it doesn't really work until eventually, number three, we get to the bottom, and that's when they launch the QE bomb. That QE bomb then becomes very, very stimulative for stocks. Then it translates into number go up for Bitcoin. But this mistake that I keep hearing people parroting is, well, the Fed are going to cut and that's super bullish, and then they're going to print and that's super bullish. It's like, yeah, in theory it's bullish, but mechanistically, that's not usually how it works. And so with that as the preface, perhaps now this chart makes slightly more sense, right? Perhaps, I'm not saying this is going to happen, okay? This is just my base case as an expectation. But now you can see that there's a little bit of space for the market to continue run whilst we remain paused. Up here, we've had it marked the whole time. Do they cut rates? And if they do, that will probably signal the top. Now, like I said, if we go to the CME is currently pricing around a 75% chance that we see cuts in March, okay? Around a 75% chance. So this could certainly continue to price down. We could certainly see this chance, this probability decrease. And for me to be certain that we are going to see a pause, then really what we would need to see is for the probability shift to above 85%. Because when the CME probability is above 85%, that usually means that we can say with, as close to certainty as possible that we are indeed going to reflect what the CME is pricing in the FOMC. But as it stands right now, the CME is kind of pricing in that the most probable outcome is that we get a cut at March. Now, if we get a cut at March, that means the top comes in between March and May, based on the historical data I showed you earlier. And if the top comes in, that means we probably are going to enter this declining period. Now, perhaps this starts to make sense when we look at this pink text that's been here the whole time. Market finally bottoms when the Fed launches record QE 10 or 20 trillion. Remember, they do not QE at all-time highs. They QE to save the thing from going to zero. So I hope that's clear. I hope you found that useful. As ever, one day at a time, okay? This is not a prediction, it's a base case, it's a hypothesis, and we'll continue to take it one day at a time. But when I see people hopping on CNBC and saying, yeah, well, cuts are bullish, show me one time in history where cuts are bullish, okay? It's just typically not how it happens. Like I said, typically they start to cut and the stock market tops shortly thereafter, and then they start to aggressively cut rates. Given that the rate hiking cycle this time around was the fastest, most aggressive rate hiking cycle the world has ever seen, equilibrium, balance, laws of the universe, at least in my mind, tell us to expect a pretty aggressive trip on the way down as well. Of course, that is speculation at this moment in time. But like I said, just be careful, because I see a lot of people saying things like this. And whilst it sounds cool, right, whilst you sound smart when you say it, the reality is the mechanism under the hood doesn't quite reflect the statements that are parroted between investors. Over in the world of Bitcoin, we've got 11 Bitcoin ETFs at the starting line ready for SEC approval next week. Now, can we get that? Or do they continue to do what they have a history of always doing, which is delay the ETF approval? It seems to me like we've got the most chance ever, although it's not the first time I've said that. So it's going to be pretty interesting. To be honest, I kind of welcome the idea that they do deny them and then we get a sell-off, because that will give us a chance to reload, reposition, and add to some longs, not only in Bitcoin, but also in crypto-related equities and alike. So I'm kind of rooting for this thing to be delayed, but I have to admit this seems like it's a pretty much done deal, especially that we got advertisements and new regulations changing pertaining to advertisements all kicking in around the same time. So let's see. We've got Jim Cramer talking about the ETF being a sell the news event. This also seems to be consensus in the market that the ETF is going to be a sell the news event. I'm not convinced, only because everyone seems to think it's a sell the news event. One day at a time, as always. We'll see it in the charts well ahead of time, of course. However, Cramer also said that you can't kill Bitcoin, which is massively bearish. So let's see. We've got more and more bullish charts. Again, as I've been saying over and over again, if we were to do something like this, then by the time we get up here, wherever that price is, whenever I do something like this, by the way, whenever I draw a squiggle, there's always someone that comes in the comments and says, this guy's calling for 270k, even though I never said 270k, okay? I just drew a little line, so don't be that guy. Anyway, assuming we get some kind of push up into here, and by the time we get to this neighborhood, right, we will be able to look back at this moment in time and at last year and say that with hindsight, this was the most obvious trade ever, because every single chart keeps pointing to a repeat of this parabolic expansion. And this is no different. This is the Don chain, and the Don chain is moving into expansion. Tells us to keep an open mind about seeing higher Bitcoin prices in the not too distant future. We've also just had a super trend trigger a buy indicator. Doesn't necessarily mean we can't have some kind of basing or even decline from here, but typically speaking, once this buy indicator flashes, it tells us to keep an open mind about seeing higher prices walking forward. So again, I say, if we were to do something like this, by the time we get up into this neighborhood at whatever price we get into, we will be able to look back at last year particularly and say, with hindsight, that was pretty obvious that this was going to happen. So with all that said, let's take a look at some charts. At the dollar right back into resistance here. So the big question is it going to reject? Are we going to get a rollover? The 3-year cycle low, we are officially in the timing band. If it was to form here, this could well be it. And I'm not saying it is, and I expect this really to form later on. I expect us to have more of a rejection, something like this, and then hopefully get down to the mid 90s somewhere around the March timeframe. That would make the most sense to me personally, but we are now officially in the timing window for a 3-year cycle low. So keeping a keen eye on that, and if this thing were to break out significantly, then that would be something we would have to respect and pay attention to. The euro dollar is still making higher highs and higher lows, and of course this is important because the euro makes up 57-ish% of the DXY. So all the while this continues to make higher highs and higher lows, then I'm sure this is going to continue to pressure the DXY to the downside. Bitcoin did manage to continue to break out and hold above this local high cluster here. Tells me at least to keep an open mind about seeing higher prices for Bitcoin walking forward. Someone asked me to cover coin yesterday. Look, it's lost its first trend line in red here, hasn't it? But as I've been saying over and over again, for me, I'm looking to somewhere to add, somewhere to move the stop up, and I'm not convinced this is necessarily it. We probably have to do something, build some kind of bigger structure, something like this maybe, and then we could draw a trend line and add somewhere lower down here, perhaps in time with a 60-day cycle low for Bitcoin. So that's what I'm looking for now. I don't just want to be adding here in case we're going to get some bigger correction, but undeniably, right, we've left this huge bottom formation behind. We've got the green horizontal denoting the range, and we've broken out and fired off. So I think this thing is overall bullish. Like I said, I'm not really sweating any pullbacks here, and I'm willing to give back a large part of this position so that I can continue to stack positions on top of each other and move the stops up, just like we've done in Bitcoin, right? We've could have taken the profit a bunch of times on the way up, but instead I'm looking to use the profit from the first trade to finance the risk on the second and then on the third. And by doing this each time, then it means we're already guaranteed to walk away with profit, even if all these positions are stopped out here. And if we do continue to move higher, which is my base case expectation, then I've got triple the exposure without taking any additional risk. So that's how I like to do it. That's how I plan to do it with Coinbase. So I'm not really sweating any pullbacks here. And the same is true of MicroStrategy, right? MicroStrategy, look, still firing off. Oh, I've left this fractal here. I wanted to show you this. This fractal comes from back here, right? Take a look at this. Is this what we're doing? Are we... Is this possible? I'm not saying we are. I'm just saying, is this possible? It's certainly something that I think would catch a lot of people off guard and they wouldn't be ready for. But you can see we are going to get into this neighborhood of congestion soon enough. And if I was to zoom in here, at some point we will get the opportunity to draw one of these bigger trend lines and then look to buy the break. So perhaps that's coming in the not too distant future, or maybe this is a pipe dream and instead what we've got to do is something way more natural, something way more reasonable like this before we can go again. As ever, one day at a time. But like I said, I want to use this opportunity or any pullbacks as an opportunity to add more positions rather than to just be taking the profit here and looking to get back in. Because if I can get 3 positions per one of these stocks, then by the time we get up into the much higher numbers, assuming we can do that, then I will have tripled the exposure without taking any additional risk. And of course, lightly leveraged each time. This is how you get altcoin performance without taking altcoin risk. So same applies to Marathon, right? Looks ridiculously overbought at the moment, and it probably is. But again, you know, if this is what we're staring down the barrel of, then do I really want to be getting cute? No, I just want to keep pushing this trade and wait for Bitcoin to continue to do Bitcoin things. Same is true of Riot, again, kind of extended here. But not really when we zoom out, right? We could still have a long way to go. So I just want to keep pushing this. And if we see any significant setups, then we can look to add again and move the stops up as always. Here's the oil short. So we're still riding the waves, right? Still rejected at resistance, still moving lower. Hasn't swept this local low yet. So I need to see that to feel really confident that this trade's going to continue to the downside. But we got the stop choked up to this level here. And we'll just keep pushing the trade, right? Gold looks like it's on its way to that cycle low, so we'll see if we can find it, and then if we can, we could maybe think about adding a long here, but I still kind of think that this yellow squiggle is going to play out. I know a lot of people don't like that idea, but it just makes the most sense to me that why gold now when we could probably let the stock market and crypto blow off, have that big bust I showed you from the melt up chart. During the big busts, all correlations trend to 1. Gold pulls back with the metals, and then out of here, that is where gold and the metals tend to recover fastest and first. So that kind of makes sense to me. But if we break out the all-time high, then I'll just assume gold's going to run with everything else and we'll get long. But as of right now, you know, being patient has kept me from sitting through all of this nonsense. And the stock market, I want to start off with the VIX. Look at this little squiggle. Is this the double top before the rollover? I think so. And there's plenty of space ahead of the cycle. So the S&P 500 has held above its cycle low for now. So until it takes out that cycle low, then the cycle has not failed. The cycle tells us to remain biased to the long side, and we'll see what the market can give. The Nasdaq's not quite the same, right? The Nasdaq has undercut its local low from here, so time to pay attention. I think we'll see another candle today, and then we'll deal with that. And the Dow, I actually tweeted and said, look, I wonder if this thing is going to force me to sell, but it's held above the trend line for now, so we'll keep pushing it, and if it starts to break down decisively, then we'll just hop out and look for a re-entry. But for now, long and strong, continue to push across the board. Small cap participation, small cap participation is still moving to the upside. So logical kind of back test in this neighborhood makes sense given that it's resistance all these times before, but something like this and a resumption to the upside makes perfect sense to me. And of course, if we really are in that final blow off portion of the rally, like my melt up chart suggests, then we should expect participation to widen on this occasion. So that's it from me. I hope you found value here. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.